All right, fam, we got to get right into it. The market is not doing so hot right now. It's on its way down. It's consolidating. A lot of stocks are dropping, and there's a ton of fear in the market. So the market, is it crashing or is it just a pullback? What's really going on here in the market? Well, we're going to take a listen to what Tom Lee has to say first. But I want to let you guys know, if you are having difficulty understanding market sentiment, which is a key factor, the psychology in the market, sentiment, and having a strong mind and not being over emotional, if you're having trouble in the market, this could be a big part of that. I would love to help you. I offer a full training course, Discord, one-on-one coaching, so I can help you achieve your financial goals and dreams, as well as financial freedom. I would love to have you guys. It's a very serious mentorship, so if you take it serious and you're committed, I would love to have you. Very limited spots, though. I cannot take everyone, so if you're committed, I would love to help you grow your portfolio. The link is in the information box below, investwithcorey.com, right there on the screen. You guys can sign up there. I would love to help you guys out. I'm driven every single day to help everyone like you achieve your financial dreams, just like I did, going from bankruptcy to where I am now in 2024 with over $2 million. So if you guys would like to grow your portfolio like my current students who are up 10, 20, 30% in their first month or two, I would love to help you guys. All of my students are up compared to when they joined. I've had many students that joined in the negative. They were negative 5,000, negative 7,000, and now they're positive 5 to 10,000. That's a $20,000 difference in gains. That's 200% on their $10,000 portfolio. So this is something I do all the time. I have students that come in that are in the negative 50% of their portfolio, and within a month or two, they're all the way in the positive 50%, 100% gain. A lot of the time, students will come in with a $10,000 portfolio and be negative 5,000, which means their value is only 5,000, and I take them at 20,000 in 2 to 3 months. That's double the portfolio and full recovery. So if you guys want to learn, I would love to help you. So let's take a listen to what Tom Lee has to say about the market and what's going on.
Well, it's been a rough week. I mean, this September first 4 days were down 4%. It's actually one of the 5th worst September since 1928, so it's pretty bad. I don't think there's actually a lot of fundamental arguments for why stocks are down this much, but I think we've pulled forward seasonality. This September to November period last year was really tough. Historically, it's tough, and I wonder if markets are going risk off early.
So you believe in the soft landing story. You said there's no fundamental reason for this. This is a debate over soft landing versus something worse. Market seems to be tilting towards something worse. You say no.
Yeah, the reason I don't think it's something worse, and we don't know, is that the jobs added was better than July. Remember, July was the hard landing fears because it was such a weak number. And in fact, the number of industries adding jobs jumped to 53%. That's the best in 6 months. And the unemployment rate fell. So I think we're at a point where the Fed could engineer a soft landing. And that's why 2 weeks from now it's going to be important.
50, 25, does it matter to you?
I think it's going to be how the market interprets either number, because there can be such thing as a dovish 50 or a hawkish 50 or a panicked 50, even a hawkish 25. So I think the reality is the Fed is on a cutting cycle. That's really a good catalyst for rotation. Interest rates are going to fall, and it's going to help industries like housing, autos, credit cards come out of this recession. So I think it's good news when they start cutting.
Okay. What's happening in tech? We said that the NASDAQ's down more than 5% this week. We're having the worst week in about 18 months, and the tech sector itself is off more than 7 on the week. What's going on with that trade?
Tech, I think, revealed its hand last week because NVIDIA had a good number, but it fell. So when stocks fall on good news, it's either a crowded trade or something bad could be coming. And then, of course, they led the downside this week. I think it is part of this pull forward the seasonality because people want to de-risk, and tech is a big holding. But I think on the margin there could also be a political aspect to this. Trump's probability of winning actually increased this week in the betting markets and in the polls. And I know investors think he'll be tough on China, which would be bad for semis. So I think part of this could be fears that a Trump gaining is bad for semis.
What if there's just too much priced into these stocks at this point? Valuations have gotten a little too rich, even if they're the greatest stocks in the world, which you've made the argument that, in fact, they are, that this is the place you want to be, maybe more than any other. And what if that's true and the multiples still don't make sense?
I think it's possible. NVIDIA's last 10 years of history, there have been 30% drawdowns, almost 8 times of similar magnitude. Its PE, NVIDIA's forward PE, was actually higher at the bottom of those drawdowns. Right now, NVIDIA's forward PE is in the mid-20s. So to me, this looks like a normal profit taking. Maybe it takes NVIDIA down to the 90s, but I think 2 years from now, that's really going to be a gift.
So when you look at all of these, are you a buyer on the dip? Are you urging people who read your research and listen to you here and elsewhere to do that?
We're close to that point, because let's say we thought that there would be a 7 to 10%, the risk of a 7 to 10% drawdown between now and November. We're almost down 5% now. I think next week we could be within that point of where we pulled forward that entire correction into the month of September. So I think we're close to the point where, I wouldn't be a seller here, and I think if the lower range of the S&P's 5,400, 5,350, we're almost there now.
You think the move from August 5th to, let's say, September 5th was justified? Was it too much? Was it built on reality? What do you think?
It's hard to know. I know that there was panic that caused that 3-day drawdown, and the VIX spiked to 66, so we know that there was panic. But we also know there was a ton of cash on the sidelines already into August that was put to work. And I think part of this was a liquidity move, because we know the yen was highly correlated with that move. And it's kind of happening again. The yen's turned strong, and it's been putting pressure on stocks.
So you hear what he says. For the next 8 weeks, he's going to be a little bit on the bearish side. Be cautious. But by the end of the year, his price target still stands pretty high with the SPY. He's calling the floor at 530. Now, I don't know if I think the SPY will reach 530. I think it's quite possible. And if it does hit 530, the floor could be a little bit lower. However, I think 535 to 540 could prove to be the floor. But then again, with the elections coming up, 530 is very possible and somewhat likely. However, we will close the year strong. After elections, things will get better. Historically, September is really not a good month, and this month is the worst September in many, many years. And not to mention, October is not much better either. But by the end of the year, going through the end of November after elections and into December, the market will recover, and it will run like it always does in December. Things are going to get a lot better, and we're going to close the year out pretty high. I completely agree with Tom Lee. I think we're going to be somewhere between 565 and 580 on the SPY going into the New Year's, maybe just before or just after. Does not matter how much money you have and how much knowledge you have in the market and which strategies you run. If you end up getting into a bad position, panicking, and get fearful and sell and get greedy and buy too late and start playing off of emotions, you will fry a big account pretty quickly. It's all about understanding when you see red, it's a buying opportunity. When people are fearful, you be greedy. When people are greedy and you see green, you sell. You do not second guess yourself. And number 2, the most important thing next to emotions is setting out a set of rules. I'm going to get in here, sell a covered call here, and I'm not going to complain if the stock runs to the moon and I miss the run and I'm assigned to my covered calls. This is really what you need to understand. It is all a mental game. The market was designed completely and utterly designed to take your money and to take advantage of your natural human emotions. You see a bunch of green, you buy, and then it comes down. We've all been there. As soon as I buy it, every time I buy a stock, no matter how high it's going, as soon as I buy it, it goes down. Well, don't you think there's a reason for that? It's because you bought while it's going up, and then people start taking profits. You see, this is a habit that you get into. You're in the wrong mindset, in the wrong habit. When you start seeing lots of green and there's a big run going on, if you missed it, stay out. You've missed it, it's too late. When you're seeing that kind of green, if you're already in, you sell. When you see a lot of selling and the stock is tanking, you start timing your entry or enter and start dollar cost averaging. There's also an order to things. Theory of relativity. What goes down must come up, and what goes up must come down. Everything's got a neutral. That's what the Bollinger Band pretty much is. But not only that, there is an order flow to things in life as well. If you had rocks, stones, pebbles, and sand, and I said, fill a 1-gallon glass jar. If you trade options with emotions and incorrectly, it'd be the equivalent of throwing sand in the jar and then pebbles. You got nice sand in the bottom, pebbles filling it about halfway up, then a bunch of stones, and there'd be no room for the rock. Or if you put the rocks in there first, there'd be no room for the stones. But when you do things in the correct order, they work out better. You put the big rocks in first to fill the glass jar, then you put the stones that fill in all the crevices from the rocks, then you dump in all the pebbles, which fills the remaining spaces, then you pour in the sand slowly slowly and let it fill all the cracks. You shake it left and right, you'll get all the sand in there. I guarantee you in that order, you will fit more of your rocks, pebbles, stones, and sand than you would any other order. This is the same as the stock market. Psychology, emotions, order flow, relativity, understanding doing things in the right order without emotion, with proper thinking, proper strategy, never second guessing yourself, and keeping everything technical and no emotions. And then understanding the right order in which to execute these strategies. This is how you become profitable in the market. Again, this is something that I teach. This is just scratching the surface. I just launched another masterclass boot camp, very limited spots. I have a full Discord training course and one-on-one coaching. I would love to help you guys and show you my secrets on how I went from $25,000 in my account to $2.2 million in 5.5 years. If this interests you and you're very serious, as it's a serious mentorship, you have to be committed. Limited spots, but I would love to have you and teach you how you can grow your portfolio and your financial wealth. You can sign up at investwithcorey.com right there on the screen, where the link is in the information box below. But look, this is how the market is, but it's honestly going to do very well by the end of the year. Don't get psyched out. Don't let them shake you out of your stocks. Don't let this happen. Don't let a shakeout happen. Be strong, dollar cost average, play the time game, play the investing game. Things will get better in the end of the year, maybe sooner. But you've got to dollar cost average, add to your positions, and when it's red, look to buy, and when it's green, look to sell. The market's going to do fine. I have a price target between 565 and 580 by the end of the year. Everything will be okay. Don't let them shake you out of your stocks. The market will do just fine by the end of the year. This is all just noise, like I've said before. We'll see you guys on the next upload. Take care of yourselves.